Hello everyone, it's me PM Farooq. Welcome to Law of Money. Today we are going to understand basics and introduction of indexes and application and benchmark of indexes. So let's start. Stock market indexes. Before we understand stock market deeply, we must first understand what a stock market index is. Stock market index represents the performance of a selected company instead of looking at hundreds of individual share prices. The index gives a single number that shows the overall direction of the market. It also reflects the investors' confidence and market sentiments. Example Nifty 50 Sensex. You can think of an index like a thermometer. Just as thermometer tells us whether the body is hot or cold, an index tells us whether the market is going up or down. What does an index indicate? An index shows the performance of selected company. It also indirectly shows the health of the economy. If the index is rising, it usually indicates a strong economy. If the index is falling, it may indicate a weak economy. Remember, an index is an indicator, not a guarantee. When companies earn profits, their shares price rise and index also rise. Major stock exchanges in India. In India, shares are traded mainly on two stock exchanges. We had talked about stock exchanges clearly in our first video, you can watch it. First stock exchange, NSE, National Stock Exchange, India's first electronic stock exchange, around 2000 publicly listed companies. Second stock exchange, BSE, Bombay Stock Exchange, Asia's oldest stock exchange, around 5000 publicly listed companies. Stock exchange provides a safe and regulated platform for buying and selling shares. Index and exchanges are different. The exchange is the marketplace and the index is a measurement. Major indices in India. Now let us see the major indices of these exchanges. Nifty 50 Index of NSE represents the top 50 companies. Sensex Index of BSE represents the top 30 companies. These companies are large, well established and leaders in their sectors. If 50-50 is rising, it means that top companies are performing well. Sectoral indices. Stock market is divided into different sectors such as pharma, energy, banking, IT. Sector indices show sector-wise company performance. For example, if the banking index is rising, banks are performing well. If the IT index is falling, IT companies may be under pressure. This helps investors identify strong and weak sectors. Application of indices. Stock market indices have many practical uses. They help evaluate overall stock market performance, give a general idea about the economy, track market trends like upward or downward. Most importantly, they help investors know whether the portfolio is performing well or not. If your portfolio grows slower than the indices, your performance is below average. Application of benchmarking. Benchmarking means comparing investment returns with an index. For example, if your return is 10% and Nifty gives 12%, you are underperformed. If your return is 50% and Nifty gives 12%, you are outperformed. This helps investors judge performance objectively. This is the end of this video. We have talked about application and benchmarking of indices and introduction and basics of indices. Thank you for watching. Stay tuned for our next video on Saturday 6:30 p.m. Bye.